Hey, my name is Tucker Krause, and welcome back to my channel, and today's video I got another quick news update for you guys. Of course, this says June 25th. Of course, this is uploaded now June 27th, so I'm a couple days late on this, had some important stuff to attend to, but I'm back. Let's get right into it. Alright, so JGBs continue to crack. The world's second largest $10 trillion bond market is blowing up, yet all FinTwit can talk about is crypto from Zero Hedge here. So, gap between JGB futures and underlying bonds soared on BOJ purchases. We can see nothing like this before. And if you're wondering, JGB, that's Japanese government bond, and BOJ, that is the Bank of Japan. So this shows that they're just going overload purchasing, and so we can see on the futures here shows that people are starting to be like, you know, something's going to have to break pretty soon because we're seeing that these futures are skyrocketing, whereas bonds aren't. And so Bank of Japan owns nearly half of all Japanese government bonds, and so that's going to be the first central bank to cross the 50% ownership mark. We can see here Bank of Japan just below 50%, whereas we see then Bank of England and the European Central Bank between 35 and 40%, whereas the Federal Reserve is a little bit lower, just below 30%. And so, of course, this is showing, like how the, futures compared to general bonds are showing, that, not a whole lot more to go before something breaks here, whether that's, the yen or that's the Japanese bond market. Either one of those is not good considering Japan's economy is very large and the Bank of Japan is also a very large purchaser of US treasuries. Alright, so real estate continuing to weaken. Over 1,000 JP Morgan home lending employees cut, following cuts by the likes of Redfin, who cut 6% of their workforce. And so, of course, this shows that a lot of the big real estate companies, well, JP Morgan's not a real estate company, but this is, part of their real estate division, are starting to notice, hey, stuff's not going too well here. We should start cutting stuff out because we might have some problems here. And we can see that right here with Zero Hedge. I should note these numbers are on a weekly basis. MBA mortgage applications are up 4.2% versus 6.6% last week. Purchases are up 7.1% versus 8.1% last week. And refinancing is down 3.1% versus up 3.7% last week. And so, of course, it's tough to say because these are just weekly numbers, but we can see it is starting to decline. And so we'll have to watch if we see this continue to decline, right? If we then see next week that this is in the 3% range, this is in the 6% range, and this is in the negative 4% range, that's of course not good for real estate, though that's starting to show. Stuff's starting to break. Alright, so PMI Composite Index plunges. So if you're wondering, the PMI Composite Index is broken into manufacturing and services, so it's a good measure of the general economy. And for how it works, well, I'll get that into just a second. The PMI Composite Index for June unexpectedly plunged to 51.2. So above 50 is growth, below 50 is decline. And so that 51.2 is a 5-month low. And manufacturing tanked to a 2-year low of 52.4, and services sank to 51.6. And weekly unemployment claims were also rose to a 5-month high. This is more compelling evidence that the US is already in recession from Peter Schiff here. And so, of course, recession technically means negative growth, and this doesn't necessarily show negative growth, but it shows that growth is declining. And so this wouldn't, obviously this isn't guaranteed we're in a recession, but like Peter Schiff says here, yeah, points that we're definitely getting there, possibly already in one. Of course, this stuff, continuing decline is not good. We should really watch for when this stuff falls below 50 and shows it's actually declining. Alright, finally something that's bullish, at least if you're in uranium, which I assume a lot of you guys are. My uranium videos are the stuff that gets the most views, so I'm going to assume a lot of you guys are in uranium. So, Canadian ban on Russian uranium. Essentially, any Canadian company or mine cannot interact with Russia. A significant portion of the uranium industry is, of course, intertwined with Canada. I'm sure you already know that. And a Canadian ship refused to load Russian enriched uranium for U.S. utility last week. So that shows that this isn't just going to affect Canada. This is going to affect a whole lot of people because, of course, lots of the Canadian companies have mines, not just in Canada, but in America and Africa. And just, Cameco does, everything. And they're Canadian. So this just shows that. This story, which I'm sure you saw last week. And something else I just want to note. So what happened on the very same day as this Canadian law being passed where now, you can't do anything with Russian uranium or enrichment or anything? Well, that was on the same day that the Department of Energy was asked Congress for $4.3 billion for enrichment. So, that shows that even this Canadian ban is still going to affect the US very significantly and that uranium supply. Alright, and one more thing for uranium here. Germany to keep nuclear reactors operating. So I just have John pulling me here. I quite like his content. Go subscribe to his YouTube channel if you aren't already. And so I just pointed this here to show that there is more corroboration to this story here. And so a source with insider knowledge in Germany says they have decided to keep the 3 nuclear reactors operating beyond the end of this year. This is not confirmed yet, but a public announcement is expected according to their source. And so, of course, Germany, with energy and everything, they're doing not well, to put it mildly, and so this shows that even as anti-nuclear as these guys are, but of course, they'll go turn on all their coal, but sure, that makes sense. But they're not completely idiotic. They are choosing to keep some of their last 3 nuclear reactors operating beyond the end of this year when they were planning to start shutting these things down. So it'll also be interesting to watch if they start to realize, hey, maybe nuclear is a good idea, but that might be a tough call for, some of the German politicians. They're not very intelligent, as you can clearly see. I'll end it right here. Thanks for watching. Of course, this is not financial advice. Do your own research. Once again, thanks for watching, and I will see you next time.